All right, good evening, everybody. We're going to go ahead and get started this evening. Tonight, we're going to be going through Chapter 13, or Unit 13. Uh, we're going to be talking about real estate math. So, if you do not like math, don't feel bad. I don't either. All right. So, we're going to talk about real estate math. Well, you're going to love this. If you love this, if you love math, you're going to love this chapter. But thankfully, for people like me who do not like math, it's not that difficult. Okay, it's really not that difficult. So you're not doing calculus and all of that. So we're thankfully not having to go that right, Stephen. We don't have to go through all of that. But again, the math portion of the test, you can actually fill every math question that's classified as math and still pass the test. So that's a positive. So if you're not good at math like me, you still can pass the class. All right, so that's a positive there. All right, so Mr. Grossman, would you move us? There you go. So our first objective tonight, now Mr. Eugene, I know this is going to be extremely difficult for you, but we're going to be talking about fractions, which I know that's very, very hard, and percentages. Okay. And then the third one, Stephen doesn't care too much about. It's something about broker commissions. He don't worry about that. It's something about money. He ain't worried about that. And then we're going to learn about sales price, and then we're going to talk about prorations. Okay. And then we're going to compute. Yeah, we're going to use the big words. Compute profit and loss, simple interest, a tax rate and amount, an insurance premium, loan discount, and a loan amortization. We'll further differentiate between the two formulas for a rectangle, cube, and triangle, and determine the linear area and volume measurements. Okay. So this is very difficult, very, very difficult, Mr. Eugene, as you can see. The basics. All right. One of the hardest things, Mr. Eugene, on this test is you have to use a calculator. Okay. And I know that that's very difficult, so you'll have to actually know how to use a calculator. Okay. Mr. Travis, how many years did it take you to get down how to use the calculator? The simple one, not the complex ones.
Quite a while.
About
Better start working.
Yeah, you better start working.
It'll take a while.
It's not the very big detail. It's just the 9-digit. Yeah, it's that. Yeah, the plus minus one. You can ask
I'm
Dave.
still on one.
Well, you need to start studying with Dave. So
I still don't know how to use one. I don't even know how to pass.
So yes, you will get to use a calculator on the test. So that's positive. All my students all the time think, you mean I got to do pen and paper? No, you don't have to do pen and paper. But they will not let you walk in with one of those complicated, detailed calculators. They're not going to let you do that. They're going to give you, most of the time, they prefer you not even bring a calculator. They'll give you one. Okay? And it's the basic one. Plus, minus, multiply, and divide. Very basic, the small ones. And when I say small, if you have a hard time reading calculators, you might want to bring your own. Okay? But again, it cannot be, some people, I had people before that they're in their 60s, 70s, and they have a hard time seeing. I said, it's fine. You can get the big ones. I used to have one. You can get the big one. But the ones they normally give you is about that big. Yeah. So it's tiny. All right. So if you have a hard time seeing, bring your own, get the large one, but do not buy a complicated one because they won't let you take it in. Fractions. One of the key things is everybody should understand fractions. Most of the stuff we're talking about this evening, if you have a hard time with this stuff, you probably may need to go back and take some basic math classes. And what we're talking about tonight is probably what you learned. What grade would y'all say? What grade y'all learned this in? Fractions and percentages and all. Fourth or fifth? Okay.
College. Still didn't learn.
Oh, you learned it in college?
Still
Didn't learn it? Aiden again said he'd be more than glad, or Travis here would be more than glad to teach you. Okay. So, let me see, Travis, 1 plus 1. Have you got past that one yet? 4. Okay. Yeah, we're still working with Travis.
It's 4? That's the minus 11.
That's why they give us calculators.
Yeah, that's why you get the calculators.
Yeah.
So, but yeah, so you do have to be able to understand taking fractions to percentages and percentages to fractions. Okay, so kind of like if you see, look down here at the bottom, they'll say there are 200 homes in your prospecting area. If 5% of them sold last year, how many homes sold last year? Well, what do you do there, Aiden? Pretty simple there.
I mean, 5% of 100 is 5. Then you double that because there's 200 homes, so 10.
Oh, 10. So in that situation, you kind of did it a little quicker, but what they're showing you here is you got your total times your rate equals your part. So take 200 times 0.05. Again, it's going to spit out the same thing that you said. Okay. But again, the key thing is questions like this one down here at the bottom. This is what your test is going to be like. Okay. Not too much. Now, I will say this. They will fluff. Miss Leela, do you remember taking your LPC exam?
Yes.
Remember how they had like a lot of fluff to them, like a lot of stuff in the questions? Do you remember that?
Yes, I do.
That's how this test is. They're going to give you a big fluff. This is a pretty one right here, okay? Miss Leela and I know what we're talking about because they would end up, it would probably be about this much of a question, all right? And all you need is the last 2 sentences, all right?
But
So
I thought you said that most of those questions are going to be like that anyway, right?
Correct. Yes.
Okay.
The majority of them are going to be just very similar to the LPC exam in regards to the length of them. All you got to do is pull out stuff. Okay. I mean, it's every test I've ever taken, licensing exams, always just filled with a bunch of fluff. And it's like the last few questions or sentences are like the main point you need to have. But again, they might say something to the fact that Eugene is a newly licensed real estate agent who just got his real estate license in March of 2021. Mr. Eugene is extremely excited to have his real estate license. He is so looking forward to start getting leads. Mr. Eugene has done a lot and he's hoping to buy his wife a brand new car. So, Mr. Eugene, there are 200 homes in your perspective, blah, 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 blah. It's going to be something like that. Wow. You don't really care about Mr. Eugene's life, okay? You don't care about all that. We want to get to the question. Yeah. Oh, well, Travis does. Yeah. Travis does. So, but again, it comes to that situation is you want to kind of get to the main parts, okay? When dealing with percentages problems, like we just said, number one, always read them. If you've taken any licensing exam, you always know to read, okay? Doesn't matter if it's, of course, your driver's license exam normally isn't as detailed. They're pretty simple. But if you get to your, like a complicated, like an LPC license or a doctor's license or a lawyer's license or things, they fill it all with fluff, but they don't, most of the stuff's kind of intertwined within the main point, okay? So the key thing I always tell people first is read it. Just read it, okay? And how I personally do it when I'm reading, I actually think, like, if I got a question, I try to envision. So if it said Aiden in the question, and I'm reading it has your name, Aiden, I try to envision somebody. Like, if it's you, I'd be like, okay, there's Aiden, and Aiden is telling me this story. So I'm reading, but I'm thinking I'm hearing it, if that makes sense. So I process it like you were telling it to me. So I listen to the whole thing, or I read the whole thing all the way through. I don't try to look at anything. I just try to hear the whole situation. Once I hear the whole situation, then I go next and I analyze it. What if what Aiden told me is really important? What he has told me, what really of this is of importance to me? Okay. Then, of course.
May I suggest something?
Yes, of course.
I know what helped me with the licensing exam is looking for patterns.
Yes.
There's always a pattern because there's always an angle. And it's a matter of just kind of seeing through what you were saying, especially with the study guides. You can actually see a lot of that pattern in that, and they'll reflect that in the test.
Very true. Very true. As it is, everything, if you think about it, the people that are writing these are real estate brokers that they just are trying to write some questions because they get paid on the side sometimes to draft these up. So they're just drafting them up real quick and throwing something in there. They're not really going to sit there and kind of give you, Mr. Stephan, kind of the situation that you've been going through. They're not going to put a lot of thought into it. They're just going to kind of throw out a hypothetical that you kind of see every day. You know what I'm saying? they're not going to get too complicated. And Miss Leela is 100% on that. Catch the pattern and you're good. If you get that, you're going to be right on. Again, then the next one, with this being math, again, you would want to look at your formulas, knowing what your formulas are. And again, it's not that difficult. Like I said, you know, coming down here at the bottom, if you check right down here, a seller listed his home for $200,000 and agreed to pay a 5% commission. How much commission will he owe on a full purchase price or full price sale? Well, what do you do there, Ethan?
Do the rate times the amount.
Stefan, throw it with your calculator. If this was you, get Stefan what you would do and actually give him the numbers.
I'd do 200,000,
Uh-huh.
which is the principal amount, times the rate of 5%. So it'd be 200,000 times 0.05, and then that would come out to a commission of $10,000.
Okay. I'll get see you. There's a different one. All right, Stefan, how you do? Talk loud.
I took 200,000 divided by 100, and then I multiplied that amount by, since it's 5% commission, by 5.
Okay. You wanna know what I'd tell everybody? Just something simple to always remember. Every 100,000 for 1% equals what? $1,000. So every time you see 100,000, 1% is $1,000. So what do you end up doing here? Well, if you want to just think it out without actually having to calculate it, what could you do? I know for every 100,000 is 1,000. Well, I can multiply that by 2 because it's 200,000. So that means 2,000. Okay, and multiply it by 5, and what do you get?
10,000.
10,000. You run that number, and you're going to get $10,000. You see how that works? So what I always tell people, they always tell me all the time, how do you run your numbers quick? Well, on average, most of the time, Mr. Stahl, what is the percentage on commissions?
3%.
3%. So if I know that every 100,000 is basically $3,000, and a house is 500,000, how much is that, Travis? $15,000. If you get that in your head, that you always remember, for every 100, it's 3% most of the time. Now, again, you got to go off your percentage. It's on the screen. But if it is for every 100,000, it's 3,000. Well, what can you end up doing? Well, you turn around and what do? You can use the same thing. Well, 100,000 at 5% is what? 5,000. You got 200,000. What do? Multiply by 2. You got $10,000. Does that make sense to everybody? Okay. So as long as you get that process or that pattern going, this is going to be easy. And I promise you, when I first started, this was a pain to me. But when I started just realizing that every 100,000 gives me $3,000, well, it doesn't matter what you give me. You give me $1 million, what is that, Mr. Eugene? $30,000. Because you add an extra zero onto it, boom, 30,000. You can put any number in there and you just multiply it by that number. Okay. So again, and you'll get this down, I promise you, you'll get this down as you work in real estate. It's just going to be boom. I mean, I can say, okay, Travis, $250,000 at 3%, how much do you make?
Oh, you're right.
Huh? 7,500. 7,500. Because what do? Every 100 is 3. That's 3,000 times 2 plus a half. That's all you do. Okay. Again, some of the questions you're also going to see as you're going through this, they're going to be talking about commission. Commission is going to be a big one, and we'll talk about that a little bit more. They're also going to ask you about the seller's net, okay? How to profit loss, how to calculate those, as well as loan discounts and rates, all right? Now, let me kind of go back real quick. I'm not there, I'm sorry. Right here. The main one that's most important to real estate agents is this very first one. Why is that important, Nathan?
I don't work for free.
You don't work for free. Travis, you want to work for free? Mr. Eugene, you want to work for free? Hey, Miss Leela, you want to work for free?
No.
No.
I should say, no, Alex.
That's true. Because the thing is, we don't work for free. If we're working for free, we might as well go find another job. Okay. So the key thing is commission. Now, if you notice down here at the bottom, the same hypothetical here, we know that 200,000 at 5% is how much again? $10,000. Now, I'm picking on Aiden here, and I want to continue just because I like to pick on one person so I can keep the hypothetical going. But Aiden, do you, if Travis is your broker,
Okay.
and you just sold this house, Stefan's house, for $200,000,
Yep.
do you get to keep the full 10,000?
No.
Why not?
Well, yeah, I'm being supported by a broker.
Huh?
I'm being sponsored by a broker, so there's
You-
broker fees.
That's right. You got to pay your broker because Mr. Travis, do you as a broker, do you have no expenses? No. So you got to pay the bill somehow, right? Plenty. So in that situation is if Aiden's making all the money and you get nothing, what happens there? You go out of business quickly. So in that situation is what they're going to do is they'll start out with something like this that's on the screen here. They'll show you this nice little deal, but then they're going to say, what does Aiden take home? If his broker has him in a 50-50 split. Well, how much would he make, Mr. Eugene? $5,000. Because the 10,000 is then multiplied by 0.5, which gives you $5,000. Okay. Now, are they always going to be that nice and neat on the exam tracks? No. They're going to say something to the extent of the seller the seller sold his house for $265,432. And the commission was 5.5%. And Mr. Aiden, he has a split with his broker and a 70-30 with his broker, and then his team lead, he has a 90-10 split. How much does Aiden bring home? We see how difficult that can be really quick, but that's where you got to come back to what we just said here. You have to read the full thing, know the whole concept, then analyze it, go in and break it down into each element, choose your formulas, apply them, and then double check yourself. Okay? I will tell you, the easiest of all is you always start off with what? If we're talking at the bottom down here, right down here at the bottom, if we're talking about Aiden's commission, then where do we need to start with? How much money is going to be where? That's being paid. Okay, that's the first question. So your very first question should be, I need to know how much is Aiden getting? How much exactly is Aiden making? So in that particular situation, you would take the amount that it sold for, and again, they're tricky here, Mr. Eugene, they'll get you. They'll use the sentence where it says seller listed his property at 200, but sold it for 150. You choose the wrong number, what happens? Screw you up. Okay. So in this particular situation, you got to have it broken down where it's easy to understand. Does that make sense? Okay. Now, once you have gotten the commission amount, then what's next? What's the next thing, Stephen? So you now have found out that, say, Aiden's getting, there's 4,500 commission. Is that where you stop to find out Aiden's pay?
No,
What do you do next?
you need to know the split that they're currently doing with the broker.
You need to know the split between the broker. At that point, we got to pay the broker. So what if, say, there's 4,500, Aiden, and you have a 50-50 split with Mr. Travis? How much is that for you?
$2,250.
$2,250. But guess what? You also work for Stefan's team. And Stefan has a 90-10 split. He gets 10, you get 90. Now, does that come off the top?
Now I'm going to have to pull out a calculator for that one.
Well, does that come off the top, though? Does it come off of yours, broker? No, it's after.
$2,250.
So you take the 2250 and Mr. Aiden, watch this, sir. 2250 at 10% is what? Knock off the 0, 225. So you'd have 2225. See how that worked?
Yep.
So in that situation is you go into this, so you're going to pay him 225. He's getting 2250, and you're getting 2225. Does that make sense? Okay. So when you're going through these situations, the key thing that you got to understand when you're going through this is that you have to make certain that you break it down in a situation. Now, I have seen the test when you get to your broker's test. By the way, for my guys in here, good luck. On the broker's exam, they will have a broker, a supervisor, a team lead, and then a group or team leader, and they'll have it broken down into 3 different ways. And so you get to calculate it all the way down. All right. Can you have, let me ask you, Travis, can you have multiple levels in a real estate brokerage?
Yes.
Yes, you can. You could have me as the broker, Travis as, say that I'm not retiring, but I don't want to run the business anymore. I can step out and say, okay, Travis, you are now the leader or the designated agent or realtor of my company, and you get a cut. So I'm going to take 30%. Travis, you're going to get 20%. And then you have Aiden who comes on and he says, well, I want to start a team. And Stefan joins his team. Well, guess what happens? Stefan may get or take 10% out of everything that Stefan's doing. Aiden takes 10% out of that. And then Aiden goes recruits Mr. Eugene and he takes 10%. What ends up happening? By the time it gets all the way through to Mr. Eugene, what's left of it? 50 cents. You get nothing really. Okay? But yes, it can go way down. Okay? It's always best though to stay where? Number 1, either stay by yourself, or number 2, work only with one lead, if that makes sense. You don't want to keep going down, 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 down. I know some of the bigger brokerages, they'll have 8 levels. Person will do a closing, go through the whole thing, and walk away with about $300. And if you know real estate, Travis, how many DPOs does that break down for $300 if they're higher than our normals?
6.
Maybe 6.
Maybe
Sometimes
5, yeah.
maybe half that,
Yeah.
3. But again, what happens is that you got to be able to know those commissions, the breakdowns. Okay. They're also going to, like I said, talk about your net, the seller net. Because one of the questions that's always asked by every single seller is this. Well, how much, Aiden, am I going to make once I sell my property? They want to know that. Now, should you ever go over and tell your person that I guarantee you, Travis, that this is the amount of money you're getting out of closing? Why can't you do that?
Because you never know what's going to come up, or you can't guarantee nothing.
You can't guarantee nothing. All my guys and gals that have been with me know that real estate changes in a heartbeat. Am I not right, Steph? So in that situation is, if you do a seller's net, and most people prefer that it be done, if you do a seller's net, make certain that you explain to your client, this is only a rough estimate. This is not set in stone. Anything can happen, but this is approximately what you can get. And one of my agents always tells her sellers is, on average, to close everything is approximately 8% of your purchase price or the sale price. So if you sell your house for $100,000, 8% is going to closing costs. So for every 100,000, you're spending 8,000 in closing. Okay. Again, profit and loss. That's pretty much simple. They're going to give you a hypothetical, go through it, talk about the income versus the expenses. What do you do there? Well, you take your income and do what? Add up your income and subtract your expenses. Okay, pretty simple there. Loan discounts, they'll give you a percentage rate of the loan. They may say 1% or 0.5%. Again, what do? Take the amount, multiply it by 0.005, and there you go. If they give you different rates, you're going to have to calculate those rates. Again, this is not rocket science, y'all. It's not. In regards to interest, okay, there is simple interest and there is compounded interest. Simple interest is easy. Simple. That's why they call it simple. A lot of people, when they come to me and they're like, well, I'm going to borrow some money from the bank. Well, how much are you going to borrow from the bank? Oh, I'm borrowing 10%, or I'll borrow $10,000 at 10% interest. And then what do? They say, I'm borrowing it for over 5 years. And what do? They take 10,000 times 0.1, and they'll get what? $1,000. And then they just multiply that by 5 and say, okay, well, I'm only going to pay $5,000. That is, in that situation, it's simple, because it is a simple interest. However, they're not taking into account their payments. Because as you make payments, what happens? It brings down the balance. Now, compounded interest compounds yearly. So if you had, say, $1,000, Mr. Aiden, on a $10,000, you have to add that balance into it and recompute everything to come up with your interest for the next year. And it keeps adding. Okay. But again, simple interest can be either by year or by month. Really depends. And all it is you add a time factor to the percentage formula, which is you take your principal times the rate times the time in months equals your interest. So how much interest would be charged if a $10,000 loan at 12% were paid off in 7 months? Well, who's got a calculator in here?
Everyone can do our phones, right?
That's right. So I want everybody to pull your calculator real quick. Okay? So $10,000 times 0.12. All I did is I moved my decimal, right? Times 7 equals what? $8,400. Okay? So in that situation is that a good interest? Not really. Because what did we find out here?
Double.
That's right. Interest does what? We looked at that form the other day and what ended up happening. Sometimes you can buy a $200,000 house and pay almost $400,000 on it. Or $800,000. It depends. Okay. Loan amortization. Again, they will ask you sometimes to calculate the monthly interest, the monthly principal, or the loan balance. So they'll give you a question such as, what is the balance after the first payment on a $150,000 loan at 10% for 20 years if the monthly principal and interest, P&I, principal and interest payments, is $1,449. Okay, well in that particular situation, again, you're going to look at what exactly is the balance for 20 years. Let me see if they gave you, no, they didn't give you your example here. I will try to actually put up the example and the next one. I don't have the breakdown with me in front of me. But it basically what you're going to do is you're going to take that 150 loan at 10% for 20 years. You're going to take this amount, multiply it by 10. Remember, you got to compound it out. And that's something that's missing in this question, by the way, is it's not telling you if it's compounding interest or simple interest. Because most likely it's going to be compounding because it's a mortgage. However, your question could be a trick question where they might not tell you. If they don't tell you, most of the time run off and compound.
It shouldn't matter for this question.
Huh?
It shouldn't matter for this question.
In this one?
Yeah, because it's the first payment.
Right.
So it shouldn't matter for this one.
Well, what he's asking though, right, for the first one, but what he's saying is after the first one, well, that's a simple question.
Yeah, because it's just what's
Well, yeah, you got to subtract that from that.
Yeah.
So yeah. So I'm actually getting a little bit more detailed in it. But Travis made a very good point.
You take that
It's talking about the first payment.
at 10% to 150.
That's right.
Subtract 14.49 from it.
That's correct. That's correct. Say that louder for them so they hear you.
Take the 150,000, add the 10% of that to it, so 165,000, and then subtract 1,449 from that.
Which will give you your breakdown because they're only talking about the first after the first payment. I was actually calculating it after the 20th payment. Well, you'll take the 10% over that for 20 years, and see that's where it still comes back to. Well, we're not gonna have that. Well, I'll get the stuff for you, so we'll keep moving on. Okay. Measurements. And by the way, that's a good thing. Me and Travis, like we were just talking, a lot of times with these types of questions, because we deal with this every single day, we analyze it a lot more detailed than what's required on the test. So just for everybody, it's like, what's going on? It's just because we're looking at it in a lot deeper way, basically. But y'all don't need to know that right now. All right, measurements. Mr. Eugene, this is going to be extremely difficult for you because I know that you don't use area or volume or linear. So never use those at your job. So exactly, right? But yeah, you will need to know basically the equations, okay, in regards to area, Q or volume, basically things of that nature. The questions down here at the bottom, pretty simple. They're going to ask you how many square feet are in a room. If it's 15 feet by 6 inches by 30 feet by 9 inches, in that situation, you're just basically going to take your two numbers there, multiply them out, and it gives you approximately your square feet. Again, if you have 10 times 10, 10 by 10 room, again, what do you have there, Mr. Grossman? 10 times 10 is what? 10 times 10 is what?
100.
You need a calculator. That's what So, again, you got to have those measurements. Prorating, we've kind of done this a couple of times through some of the previous lectures where we explained it and broke it down. But basically, the general guidelines with this is that you're going to prorate through the day of closing. And a lot of people get this screwed up. What happens is the seller is responsible until the day of what? The day of closing. Who takes over the next day? The buyer. So even if, Mr. Eugene, if you go in and you're selling your house to Miss Leela, and y'all close at 8 a.m. on the dot, okay, both of you close and you walk out of there at 8:01, all right, do you mean that you still got to pay for that full day? Yeah, you do. Because the fact of the matter is you held ownership in that property up to 8 a.m. It's actually going to be the day of funding. They use closing up here, but it's technically,
If you closed at
I'm gonna
5
tell you-
you're going to close, they're going to ask, for the test, it's closing.
It's close.
In reality, it's funding. Don't let that confuse you. Okay, and I'll explain why, but I just want you to remember the word closing. Okay.
The test makes it every day. When you close, you always fund this. Like it's all the same.
Yes.
Yeah, they just
The test is always the same. You're
Yeah.
closing. But what can happen is you could, and I just tell my agents this all the time, if your client closes after 12, you're not going to fund until when? Next day. What if it's a Friday? What does that mean then? Monday. What if Monday's a holiday?
Tuesday.
Yes. So it's imperative that you understand that when you're closing, I used to always force my agents to close on a Friday. Friday. That's paycheck day, right? Everybody wants money on a Friday. But what's the problem? If you don't close on that by 12 o'clock,
And it's not just you.
it's both parties, right?
Yeah.
It's both parties. If Leela signs at 8 a.m. and Mr. Eugene, you come in at 2, it comes from the last person that signed. So if you come in at 2, Mr. Eugene, guess what happens? It's not going to fund until that next business day that's not a holiday. So imagine this. Imagine if you closed on Friday, say Mr. Eugene closed at 2 on Friday, he's waiting until Monday because they don't fund, and then guess what happens? There was that snowstorm for a week. You know what's even better, Mr. Travis? When do you get possession of the property? At funding. So what happens if Miss Leela closed at 8 a.m. on Friday, Mr. Eugene went in at 2 p.m. on that Friday before the winter storm, okay? They tell Mr. Eugene, we'll fund on Monday, and then they shut down the offices for a week. When does Miss Leela get to take possession of the property?
The next one.
That following Monday after that full week of closure. Which means, guess what, Mr. Eugene? You don't get your paycheck until that following Monday, and she don't have a house. Okay? So in that particular situation that's why I've learned over the time, it's always best to close on a Wednesday or a Thursday. Okay? Even a Monday or a Tuesday, just not on a Friday. Try to shoot it Monday through Thursday. Because if something happens, what happens? You still got another day. Okay. So again, they're going to prorate through the day of closing. You do need to know this difference here. A statutory year, very key, a statutory year is a 30-day month at 360-day year. That's statutory. And this is used when calculating the prepaid interest on the sales of a Fannie and Freddie Mac loan. Okay. Now, a calendar year is based off the actual days in month, which is approximately 365. Okay, and it's used on most tax and interest prorations. And why is that, Mr. Travis? Why would they not want to use a statutory year but a calendar year for taxes and interest?
Because it's an extra 5 days.
It's an extra 5 days of what?
Money.
Money. Okay, so in that particular situation, is we got the money, we can make more cash out of you on those 5 days. Now, Mr. Grossman, question for you. You've been to a closing. I know Mr. Travis has been to a closing too, but you've recently been to one. What's this whole thing about debit or credit?
There'll be certain things that debit the buyer, debit the seller, and credit the buyer, credit the seller.
So what's debit mean?
It
It mean add or subtract?
subtract.
Why does it mean subtract?
Because it's like a debt
You're taking away.
taken away.
What's a credit?
It's money going towards the buyer.
Or funneling to you.
Yeah.
Okay.
Receiving.
So they will have questions on the exam that are going to say that the seller is debited X amount of dollars and the buyer's credited X amount of dollars. Just remember, debit means subtract, credit means plus. Make sense? So what exactly are these steps? All right. Well, in prorating, you break the charge into monthly or daily amounts. I'm just going to be honest with you. Easiest way to do this, break it down to daily. Don't break monthly. Don't break monthly. Break it down to daily amounts. Calculate the time. So if it says, Aiden, you've had the property for 20 days, and then I get it from you for the remainder, well, then I need to take it. Do I divide it by 20 days or do I divide it by the whole month?
Whole month.
The whole month. A lot of people make that mistake. They'll say, well, Aiden's got it for 20 days, so I just need to divide whatever the number is by 20, and then there we go. No. If it's for a month and there are 30 days and it's $30 is the fee, well, how much does that break down to? $1 a day. He's had it for 20 days, so what's it come up to, Aiden? $20. So $20 goes to Aiden, and that's going to be what? Debited from Aiden, and what? Credit it to me. Okay. So you want to break it down into daily amounts, calculate the time, and then of course multiply either the monthly or daily times by that particular set time. They will do this on mortgage interest and taxes. So they'll say something as a sale is to be closed on September 15th or September 17th. The current real estate taxes are $1,200. Prorate both using statutory year and calendar year. Well, if they're $1,200, what's that come down to? Well, 1,200 divided by 12, Mr. Eugene's what? $100. And Aiden had it till September 17th. Well, there's how many full months did Aiden have it for, though? 8. So 8 times what? 8 times 100 is $800. Now, where they want you to do the statutory and the calendar is in September. So if it's 30 days, you would take 100 and divide by 30. What's that give you?
3.33.
Okay, and then you multiply it by what?
17.
17, which gives you what?
56.6.
56.6. So that's going to be based off of a statutory year. If it was a calendar year, what would you do?
There are 30 days in September.
There's 30 days in September. Yep. So it's the same thing. Very good. But if there was 31, what would you do? Take 100, divide by 31, multiply by 17, give you your number. Pretty simple. Guess what? That's it for math.
Also on the test, the answers will be 856.61 and 2,458.95 and a bunch of other numbers that make no sense. So you don't have to get exactly the number. So if you're worried that you're going to be off by a couple pennies or not, you're going to be fine. As long as you get the rough estimate of 800 and then you kind of understand that it's about 50-ish away from that. Once you kind of do the math, you'll get it. The answers aren't going to be right next to each other, so you're not going to worry about that.
Exactly. Very good point. Because the whole thing is that they're going to throw some wild numbers at you, but that's why you get your calculator. Calculator saves you on everything. You're not going to have to do pen and paper. When I first took my real estate exam, when I was becoming what y'all are, an agent, we didn't really get to use a calculator. We had to use pen and paper, and we had to break it down, pen and paper. Okay. It took a while. But now they do allow you to have the calculator, which basically, if you know how to work calculator, you run the numbers, and there you go. Okay. All right. So, Mr. Grossman, can you go ahead and stop our recording this evening?